Hey folks, this is Simon, host of the FundKernel podcast. I've got a good one for you today. In this episode, I spoke with Andrew Woodruff, Chief Investment Officer for Black Lotus Capital, a hedge fund focused on digital assets. Now, I was very much looking forward to this because a couple of months ago, Andrew and I have organized a few breakfast meetings with family offices that are in the FundKernel Investor Network. And what strikes me during those breakfasts was how Andrew can talk about digital asset in a way even traditional finance brain can relate and understand. He really helped demystify a lot of misconception about digital assets. So I was all gung ho in having him in this podcast, so he can share his views to a wider audience. If you want to learn more about digital asset, this is not an episode you want to miss. Again, Andrew Woodruff from Black Lotus Capital. we'll just go right in. That's all we do. So, how's it going? You're still
Good.
your voice is still bad. You're back in Puerto Rico, right?
I am back in Puerto Rico. Yeah, I'm fighting a little cold here, but it's just the nature of having young kids that seem to get sick every week. But
Oh,
I'm all good. Back settled in after a 4-month Asia trip. Lots of conferences, meetings, speaking engagements, all that. But it's good to be back settled in and just focused on the day to day and the growing of
yeah.
the IP and the business and everything.
Good. Appreciate you doing this, Andrew. Thank you. For those of you who
Sure.
don't know, I'm talking to Andrew Woodruff, Chief Investment Officer of Black Lotus Capital. So, Andrew, why don't we start us off by maybe telling the good people here on the FundKernel podcast, something about yourself and Black Lotus. I'm going to ask you about the name, obviously, because in the hedge fund space, seems like everybody has the word black in their names. So you're going to have to explain, okay, how did you come up with, the name Black Lotus? And does that even tie down to whatever it is that you guys are doing?
Yeah, no, thank you for having me. Really appreciate it. Yeah, so Black Lotus Capital, we're an institutional grade long short hedge fund focused purely on liquid digital assets. My background is I started off my finance career about almost 20 years ago now at JP Morgan in global emerging markets and sales and trading desk in New York. We were involved in all sorts of different asset classes and products. And then ended up going to Columbia Business School for my MBA. And then after then, I ended up in the hedge fund industry, namely in equities, but also doing research in commodities and just different sectors. But my crypto journey started in 2017 with a couple of our general partners who obviously work with me today, and started out as a hobby. Then just curious, interested. Always like to learn new things. I remember having my friends over on a periodic basis at my apartment in New York, just talking about ideas, sharing ideas, trying to learn and understand these things. And it just started off as a personal passion, and then that evolved into a profession. After during my time in the hedge fund world, I was at a multi-billion-dollar hedge fund. And I started doing this professionally over there. And met a lot of great people across the space, other managers, venture capitalists, liquid managers, you name it. Some of them are, my good friends today. And one of the things that we did take away, at least I took away from the process of just learning about the industry was, the investment research and risk management quality that we're generally used to in equities and other asset classes was very different from what we were seeing in the digital assets class. That makes sense because it is a newer industry, right? And so the idea that I had was, what would it take to build something that we would consider institutional grade to kind of bridge that gap for, let's say, U.S. pension funds, endowments, foundations, the real big types that have very heavy operational due diligence processes that,
Mm,
care a lot about risk management and everything, but are interested in this space. Can we build something or pioneer something more customized for them that would meet all those, diligence requirements and the risk management profiles that they're used to in other asset classes?
mm.
And what would that look like, and what would that be worth, right? If you could do something like that. So that was the big idea. This was towards the end of 2021. Decided to take the leap. It was a kind of one of those things that if I don't do it, and someone else does it, it's gonna always stick with me. And I want to live a life with no regrets. Not be scared to try new things.
Yeah.
And the timing is also right, just at the stage of career I was in, and wanted to always do something on my own. So decided to take the leap. Also with that, left New York City after being there for 15 years. Had two young kids, and we were looking for space, and so we also ended up moving down to Puerto Rico. Purely, namely for obviously tax benefits reasons, but there's also a huge crypto community down here of a lot of the largest players,
Oh, is
uh,
there?
and yeah, most influential people I'd say in the space. There's a lot of them down here.
Oh, wow.
Um, but the idea was quite simple. These liquid digital assets, and when I'm talking, mostly I'm talking the stuff beyond Bitcoin, right? Stuff that most of the institutional space hasn't really been paying attention to yet. But these are assets that we've seen in the past can go up 10x, 100x compounded over time. They're liquid. For the first time in history, you can get kind of VC-like returns that's liquid. The question I kept asking myself, and we were asking ourselves, was, how do you get exposure to these assets that can go up 10x, 100x plus over time without taking the massive drawdown risk, the volatility,
Mm,
and we'll also without having to try to time it. Timing is extremely hard. Timing the markets is incredibly hard. All it takes is for some random news event to come out of nowhere and turn the sentiment and charts all in the other direction. And we've seen this in crypto, obviously, many
yeah.
times in the past.
Yeah.
And so we wanted to remove all that risk, and really just focus on something sustainable, something that could withstand bull and bear markets without having to worry about that kind of stuff. And that's really what led us to the big idea of what Black Lotus would become. So we spent about a year and a half just further building, testing our IP, lots of diligence across different service providers.
Mm,
Uh, we did this all with our own money. We wanted to make sure that we had high conviction in what we were doing before we launched a fund and started managing other people's money. We stress tested the strategy in 2022, which I think was a good year to stress test in, given
yeah,
all
I'll
the
say.
things that blew up and everything. And it was after that stress test that we felt like we built something unique and that worked very well.
Right.
And we decided to officially launch the flagship fund April 12th, 2023. So we're about a year and a half old in track record, even though we've been building this for many years,
Yeah.
before then. So yeah, hopefully that's helpful a little bit on my background.
Yeah, definitely. So you have co-founders, right? How many people actually did this with you together?
Yeah, so we have there's four general partners, four co-founders, same four today. And then we have three other employees, and we're kind of globally dispersed, a couple people out in Asia, a couple people, in Puerto Rico and in other places, and stuff. But yeah, it's four general partners, and we, own 100% of the
Right.
IM.
Right. And are you currently seeking GPs or LPs into your vehicle?
Yeah,
Or
that's a
does that even make sense in the crypto world or digital
Yeah,
asset?
no, it makes sense. It's a good question. So of course we're a liquid open-ended fund. So, we take in subscriptions every month, and people can also redeem quarterly and stuff. So it's an evergreen, kind of structure. It's not closed-ended. And so we're always, having lots of investor meetings, and we've been able to raise money over time, and now manage money for a few institutionals and a number of other investors. And then on the GP side, we have, had these talks with a number of different parties over the past 2 years, even before we launched, when we'd share our IP with them, and they would see how we're doing it and everything. And some people get excited, and but generally we've stayed away from that. We never needed the extra funding. I think that's shifted a little bit, not because effectively I feel like we're kind of leaving the, let's say, startup early phase of where we're at, just getting to, peer fund sustainability from an economic standpoint, and really moving into the growth phase.
Right.
So I think after doing this for, having a 1.5 year track record, building a very good investor base, and then with, commitments we have on the horizon and everything, I think the time is to now take it to phase two with a lot of our IP data analytics that we've been building for a long time, that we have phase two schematics for. You need to hire developers for that. We want to hire more analysts. We want to grow the firm. We feel like just the, I don't want to say lack of competition, but at least from the institutional side, who are looking at these types of assets well beyond Bitcoin. There's no Warren Buffett's in this space, I would say, and for lack of a better analogy. And to me, that's just opportunity. I feel like we're barely scratching the surface, and by upgrading those, areas, we feel like we'll optimize and hopefully produce even more alpha than we have in the past. So with that, raising money and potentially bringing on strategic GP partners does seem to make sense at this time. But we're, early in those discussions and thoughts about it.
Yeah. The funny thing is, when I started FundKernel, well, I shouldn't say when I started. FundKernel started like 2 years ago, but the concept of a FundKernel started way back almost 10 years ago in 2014. Basically, the idea was how do I help asset managers find investors, beside the private bank. Because I've always realized that, if you're not a KKR, if you're not a Hamilton Lane, if you're not a Franklin Templeton, chances are you're not going to get into the private banks. And then there's a tons of all these smaller asset managers who does really well. I mean, they have some really strong team that came out of these really big shops, but because they've become independent, they can't get distribution. So the idea was of FundKernel was that. And back in 2000, I think it was 2016, there was this craze about where I heard about securitize or tokenizing
Mhm.
assets. And that's when I thought, okay, well, that could be a very interesting idea. And there was a time when FundKernel was positioned as a tokenization platform for hedge funds. Now,
Mhm.
but if you could, hear what I'm saying, Andrew, is I take a very technical approach when looking at Bitcoins and all that. I never really tied that to an arbitrary value. Like when security token is supposed to tie the asset to the ownership of the fund, but I've never
Mhm.
been able to sort of make that connection between like a Bitcoin and how does that value. Now, so why don't you take me back in 2017 when you first got into it? I want to sort of maybe understand how your mindset from, are you first introduced to crypto or digital asset as a technology first or as a financial vehicle first?
Oh, that's a good question. And I want to answer, everything honestly. Back in 2017, I think a lot of people, you know, uh, um, look at this asset class because they see Bitcoin price going up. Let's be honest, right? And so they start paying attention to it. Maybe they have friends involved in it and everything. I, like most people, looked at it, and some of my friends, brought it up to me, and it looked like, scam charts, that we've seen in other asset classes anywhere. The parabolic movements upwards usually come with a parabolic move down. And so I was skeptical as anyone else. And, I kind of learned the whole value investment way of looking at stuff, very long-term oriented, fundamental based way of investing and everything. So I share that with a lot of newer people who are coming in today and asking the same questions that we did back then. Um, it was after getting into it more, understanding the technology and everything, where I think most people, if you go far enough down the rabbit hole, you start to look at it differently and you look at it more from a technology base. And then you realize that this technology is something truly new, to the world, and that there are certain use cases of that technology that seem to make sense. Where I think one of the ways we kind of look at the space is like, and this is the same thing in equities or other sectors and asset classes we looked in, like what feels inevitable, like it's almost like you do so much research that it's hard to not see the world play out in this way, right? Because
Mm,
to us, and if you look at technology across, since the caveman days all the way to today, whether it's a product or a service, new technology needs to be cheaper, faster, and or safer than the incumbent technology, product, services, whatever, corporations, in order to get widespread adoption to, become actually, something everyone uses. Otherwise, if they're not cheaper, faster, and or safer to a significant degree than the incumbent technology, then it's just a gimmick, right? And most things are gimmicks. I mean, there's been plenty of new technologies that just never caught on.
yeah.
So we kind of look at everything through that lens. Like, does blockchain technology, for whatever sector, it could be gaming, it could be decentral, finance, it could be distributed computing, insurance, you name it. I mean, pretty much any other sector out there. Um, does this technology make any sense? Or does it make it cheaper, faster, safer for the users or the customers of those products and services? And if it doesn't, it's probably a better short idea. If it does, and you get to a point where your conviction can get so high that it's like you almost can't see the world not going in this direction or this not being widely adopted over time, that's when we get really excited for
Mm.
long ideas. So it is our approach today and how it's evolved over time is very tech-based and very fundamental oriented. But these are all venture stage assets. Anyone who's invested in startups knows it takes years for things to really materialize. So we have to be patient in how we track these things and watch these things to give these things the time to prove that over time.
See, your answer is very interesting because you're talking about this as if like there is the technology aspect, which is blockchain or distribute. Do you make? I guess can we make the distinction? It's the distributed ledger and blockchain. Distributed ledger is the umbrella term, and blockchain is one type of distributed ledger. At least that's how I understand it. Correct me if I'm wrong.
Yeah, I mean that's it's pretty accurate. I mean, look, Bitcoin is kind of the first one to do it. All blockchain is kind of based on decentralization, kind of fundamental, right? Like the idea that you can cut out, middlemen, whether that's corporations, governments, whatever, that kind of, humanity uses to make markets and, connect buyers and sellers or redistribute taxes or have governance or anything. Blockchain is just about, hey, technology, algorithms, all these things have gotten so good today that do we still need middlemen to facilitate all that and still pay them exorbitant fees, or their rent-seeking behavior and all that stuff? Can we cut that out? And essentially, if you cut that out and things are more peer-to-peer, you would assume that things would be fundamentally cheaper, maybe faster, and maybe safer than when you do have middlemen. And that's how everything looks like to me in blockchain personally, is like, if you can't do that for an industry, then maybe it's not the best product market fit. But Bitcoin is a version of that, right? Obviously, it started off as, it's kind of this, it's looked at as digital gold today. just another store of value. It's kind of becoming its own investment asset class. I think originally it was kind of looked at as a medium of exchange, and it's still used as a medium of exchange in certain, smaller use cases and everything. But that's just a form of that. And so you have a consensus of a lot of validators and nodes, which is just think of like computers all over the world
Yeah.
that, are segregated. They're not, all part of the same entity or whatnot. And they're all just, processing these blocks. And think of it just, again, it's just a distributed ledger, right? So every block is just loads of information of who sent Bitcoin to who, just transactions. And then these computers all over the world effectively get together and say, hey, are these, valid transactions, or are they fraudulent or whatever? And when they hit consensus, that's verified, and then we move on to the next thing, and then everything is immutable, right? So once something's been verified, that that's correct, and it's fully transparent. So anyone can go on the internet and look at all these different scanners that show the blocks and the information in there and everything, and they could verify it themselves as well. So they don't need a bank to settle transactions between two parties, right? And banks get, paid a lot of money to do this. And, there's obviously regulatory, DTC, CC, and all those different bodies that, help with settlements and everything. The whole idea is that effectively the idea is you can remove all those, extra, stuff, and just use algorithms and computers to do
Yeah.
this. And that theoretically should be much cheaper and much faster, and ideally much safer because it's immutable and transparent than the old world of transferring value between people.
Yeah. But I think what you said earlier was very interesting in that it seems like you're not saying I'm investing in this coin because it's a coin, run by somebody. You're saying that I'm investing in this coin because I see a really strong application of blockchain in this scenario. And it does, like you said, saves time, improve efficiencies and all that. And that's why you put it in there. So you're not really investing in digital asset. It sounds more like you're investing in the successful application of digital asset and how it can create value by reducing the middleman. That's more what you're investing into. It's not really a coin, it's the application of the coin that you're going to invest into.
Yeah, I think that's generally right. All these tokens, coins, whatever you want to call them, digital assets, they're all made by people in the end, until AI starts making them. But generally speaking, the projects to date have been made by other humans. Developers obviously are very involved, but these projects all start out with some vision or idea of what using this technology would look like for a certain sector in the real world, of how their thing could be cheaper, faster, and or safer than that incumbent technology, right? Just like any startup in the real world or the Web 2 world, the internet world that we all come from, and it has become very large today. And so there are people behind these projects. So we look at the management, and it's decentralized, so there's not supposed to be any individuals that control everything or whatnot. But it's hard to start fully decentralized right off the bat, because you need coordination to make things happen.
Yeah.
But these projects are trying to do something that add value to the world. A lot of them, or at least the good ones that we try to focus on. And then the digital asset that they produce, is usually just an expression of the value of that in this space. And there's a lot of digital asset tokens that I would say have no value, and those end up more on the short idea list. But the few that we feel like the token actually serves a utility function, governance function, adds value to the ecosystem, allows that ecosystem to coordinate between each other, whether it's peer-to-peer transactions, or gaming of sharing digital, virtual asset, gaming items value between each
Yeah.
other, or voting on governance of where a project should be going and how to update the code and everything. That's generally what the digital assets for. Now, digital assets come in all shapes and sizes. I think a lot of people who are newer to this space, they all kind of expect these things to look just like Bitcoin and be kind of similar to that. And
Yeah, that's
it's
exactly how
very
I think of
different.
it.
Yeah, it's very different. I mean, we treat Bitcoin as its own like thing. To us, it fits in this store of value, slightly medium of exchange type digital asset. It's obviously the OG that's been around since the beginning, and the reasons why people are investing in it are very different, than a lot of the other digital assets that we look at for other projects in
Mm,
the space. And some of these digital assets, look like currencies. That's where the whole cryptocurrency moniker came from. Um, but a lot of them look more like commodities or even equities to us, And so, you can program, these digital assets, which is effectively just smart contracts that are in the blockchain that they're built on. You can program them to be whatever you want it to be. If you know
right.
if they make revenues, if that project makes revenues, you can share those revenues with the token owners, right? Just like an
Yeah.
equity. It's Then this gets into regulatory, securities laws and everything. Like, is it a security? Is it not? And everything. So, but yeah, there's obviously some tokens that are focused on that way of creating utility value for token holders. There are tokens that are just purely governance tokens, right? The only thing you can do with them is you can vote. You can vote on the direction of the project and everything.
Mm, mm,
Vote on the updates of the code, and some people find value in that. It really depends on the project and everything. You have tokens that have generally no value, right? I mean, meme coins, generally speaking, a lot of them don't do a lot, and but people are investing them for other reasons. But the whole point I'm trying to get at is, you can make fixed income tokens, right? These tokens can be yield bearing, right? You can make commoditized tokens or commodity tokens that don't really do anything, but you have to buy that token in order to do something in the application, right? You have to spend
yeah.
it in the application to use it, right? And if you have equity like tokens, you can do DCF models, and you can create PE ratios and all the fun stuff that we use in the equities world. You can do all that, and you can come up with the same valuations. It's just I don't think people realize that because most people haven't spent a lot of time looking at a lot of different altcoins. Altcoins is just the name we give for tokens outside of Bitcoin. But there's thousands of these out there, and again, a lot of it, just like startups, aren't really built to last. Our job is to find the ones that we think will be the future Amazons or Googles of this space,
Yeah.
and do a lot of research to hopefully get conviction in being able to own these assets and hold them over time. But the research does vary. If it's more commodity like, I'm going to apply a more commodity like valuation model to it. If it's more equity like, I'm going to do something more akin to cash flows and everything. So it's very, very diverse.
And you're the one that makes the call whether it's more commodity like or equity like, right? When you engage with these founders of coins and then hearing their business, you then determine, okay, the way that it sort of behaves or the economics of it, okay, this more akin to a commodity versus an equity, and therefore you'll go that route. You're the one who decides on that, I would assume.
Yeah, I'd say we as a firm, we generally we do everything from first principles. That's how we look at the world. So it
Yeah.
doesn't matter what everyone else thinks or does. We have to do the research ourselves. We build our own frameworks for this space. We feel like we have the experience from other asset classes to help, create more appropriate valuation methodologies and fundamental metrics for different types of assets, digital assets in this space. Maybe other people don't agree with our frameworks. That's totally fine. Our goal is to ask ourselves what's most accurate. And when I think of fundamentals, so the question we always get is, there's no fundamentals in crypto. Everyone's just trading this stuff short term, quant, retail traders, all that
Yeah.
stuff. What do you mean fundamentals in digital asset space? That's insane. And a lot of people point to the lack of cash flow generation and value capture that happens with these projects for digital asset token holders, and they're right. Most don't fit that, but if you've ever worked in something besides equities, other asset classes, right? There are fundamental, ways of valuing commodities and currencies and things that, people have been doing for hundreds of years that seem to work for them on, kind of helping assess the future value or where something is going to be trading at down the road. And we just adapt those processes and those frameworks for this space. It's to us what a fundamental, thing is to me a leading indicator of, something that we can track that's more slower moving.
Yeah.
It's obviously fundamentally tied to the project, but something that we think the price is going to be highly correlated with down the road, right? So a lot of this is like user metrics, right? You may not make any revenues. Most startups don't make revenues at the beginning, right? But 10 years from now, we think they will make a lot of revenues, right? So how do you value those things? How do VCs value startups and everything, right? Well, you have to come up with ways of assessing that value and kind of comparing them to its peers. But that could be user growth, user metrics, transaction volumes.
Mm.
For very new projects, it could be the number of developers, right? If you have two projects that are exactly the same, doing the same thing, but one has 100x the developer community versus the other one, well, I would say that one that has more developers probably has an edge and should be valued higher than
Yeah.
the one that doesn't. Meme coins is the example I use all the time because, again, that's the easiest one for everyone to be like, there's no way you can value a meme coin and everything. Well, the way I think of it is like, what is the metrics that I would look at that are more kind of predictable and slower moving, more researchable, that I think will be highly correlated with the token meme coin price down the road. And so if you have two, meme coin tokens, exactly the same price, same everything, but one has 100x the social community, Twitter followers, Reddit engagement, all these different social metrics you can track and look at. If I'm an investing man and I was forced to invest in these things, I would go long the one with 100x and then hedge it out by shorting the other one, right? And if you do that across a lot of sectors and stuff, the probabilities of outperforming the longs versus the shorts, go up. But fundamentals to us really varies on the asset, that we're looking at, the sector that we're looking at. And the good thing is a lot of these things do produce cash flows, and you can do more equity-like valuation methodologies on these things, while also tying in other types of valuation metrics like price over number of users or transaction volumes or whatnot. But again, I don't think most people know that unless they've spent a lot of time in the space.
Yeah, but I think you must have also encountered a lot of growing pain when you first started this journey since 2017, because you just made it sound as if we're evaluating a startup, and for us, for the traditional investor, let's say a traditional PE, if they hear that, if that's all you're doing, then why can't we apply the same principle to crypto? Just we're a PE firm, we've always invested in startups, although not crypto startup, but if it's just like investing in startup, we could do the same thing. But I don't think it's that simple. I think there has to be some growing pain for you guys to realize that, well, it doesn't match exactly what we've done in the past. There has to be something, there has to be something that needs to be adjusted. How long did it really take you to sort of find that, okay, I think we've got the engine tuned just right, or right enough to a point where we're really confident about what we're doing here?
I'd say at least a few years. I mean, it's going back well before Black Lotus and everything. You're right. So for startups, for example, no, most VCs aren't valuing startups, companies based on PE ratios, right? Because the PEs are, the earnings is negative, right? Like doesn't make any sense.
Yeah, tell me about
Doesn't
it.
mean that they're not, yeah, doesn't mean they're not building something great that could be, positive earnings down the road, but it just doesn't make any sense at those early phases. Same thing with digital assets. Most of these things are less than 5 years old. They're very nascent. They are startups, they are venture assets. If you do a PE ratio, even on the ones that are making, actual revenues and everything, they all look insane. Like it doesn't make, they all look overvalued, like crazy. And so, we're very honest with ourselves about that. The question is which ones are actually going to grow into those PEs and beyond? Which ones can we find any value, kind of PE ratios in this space and everything? And so it really varies. But you have to, think a little bit like a venture capitalist and take a longer term time horizon to watch these things play out. But to your exact question of like, yes, it did take a while for us to get to this point. It's kind of a volatile way of learning in this space because you have very high highs where you think you figured something out and you think you understand it very well. And then you go a little bit deeper and then everything falls apart. And then you go to very low lows
Yeah.
and
Yeah.
everything. And it just took a long time for us to really, and I think the way we got comfortable with building our frameworks and really kind of feeling like we can get conviction in this space, long or short ideas, is just like you look at hundreds of these things over years, and then you use your old experience to really slice and dice these things in so many different ways. The patterns start to become apparent.
Oh,
You
okay.
start to see the same stuff over and over, just like learning anything else, right? Any job, right? Like like you learn a new process, it takes time. Next thing you know, you've been doing it so often that the patterns start to really stick out, and then it becomes much easier.
Yeah.
So I think what we benefited from is, by starting doing altcoin research back in 2017, just as a personal hobby. I mean, 7 years later, looking at these things, tracking a lot of these things. I mean, some of these things are that old. You see the cycles and everything, and you start to get conviction on how things move and how things should be valued,
Yeah.
that are more, again, tied to the long term, value or price movements of that digital asset and that project. So yeah, it's just a lot of research. There's really no other way to get around it, if you want to take a more longer term, fundamental oriented approach.
Yeah.
And I think because it's so complex, because there's so many things to look at, most people who invest in the space opt for a more shorter term oriented strategy that just focuses on short term oriented charts. Then you don't have to think about any of those things. But that's just not what we do.
Yeah. And I think it's a very important point because it's the time investment that you personally make that is the value. That is the IP in essence of what you have worked behind. And that's the part of the reason why FundKernel doesn't really look at fund purely on track. I mean, we have some funds that are doing phenomenally well that has less than 3 years, but that doesn't mean that the fund has operating within 3 years. We have had funds that the fund manager has been playing with his money with his own family, friends and family money and a closed fund for a very long time, have found a successful strategy, and then decide to, make it public. All right. And the track actually starts where he when he made the fund public, but doesn't really factor in the amount of time investment he's made in understanding and strategy tuning it so that it will be effective, it will be efficient and consistent over that time. And that's why we always thought that, oh, just because you have a 20-year track doesn't necessarily mean that you're great. Just because you have less than 3-year track doesn't disqualify you as a good fund, because the person who's actually managing the fund needs some time to really figure out the strategy and really figure out the methodology that can produce the alpha that that they want. And I think that's the very important piece. But I want to sort of maybe go back to evaluating startup, because Hong Kong actually has, well, I'm sure Hong Kong has at least on the surface, they want to perceived as a very crypto friendly or Web3 friendly location. And I'll give kudos to the government in that they do a lot of support for young entrepreneurs, especially around in Cyberport. I was invited to go to speak to a bunch of young entrepreneurs who are into Web3. There are some really interesting concept that they're proposing and they're formulating, and they get to go to, I think, San Francisco to meet with some people in the Silicon Valley. Very happy for them. But what I've noticed though is when they were telling me about their business, the idea is really good, but I think they always have this missing piece is that, oh, the user will be able to earn these coin here, earn that coin here, and then, oh, when they do that, they'll earn these coin. And then my question to them is, okay, they've earned all these coin. What are they going to do with it? How are they going to use it? What's the benefit of having all these coin? And most of them get stuck in that area. Like, can I spend it? Can I buy groceries with it? Can I pay rent with it? What can I do with it? And it seems like that's the missing piece for a lot of these younger guys. I'm not sure if that's a similar observation. You having obviously seen more of these startup than I ever will. What are some of the missing element you feel are the startup that you got a good idea there, but you're just missing that tiny little, long leg piece.
Yeah. Look, I mean, I just want to preface this with we think most tokens are, they don't have a reason to exist.
Mm.
We think 99% plus of these digital assets, I mean, hundreds get launched every day because it's very easy to launch a new token, right? It's just, you copy someone else's open source code, go launch your token, and
Really?
then
Is that
people
it?
start trading it. Yeah,
Okay.
I mean, for the scam projects, that's all it takes, right? But
Yeah.
so we think most of these will lose value over time. But it's not shocking, right? Because most startups fail, right? Everyone knows the stats around that. Most startups fail, right? VCs make their money when one startup is the Amazon, is the
Well, yeah,
Facebook.
all you need is one. Yeah.
All you need is one, right? Their goal is to diversify as much as it makes sense and hit that one. And if they hit that one, it doesn't matter what any of the other investments did, right? Very similar to that, to that, right? So even though we think, 99% plus of this stuff is garbage and it'll trend to zero and doesn't have a reason to exist and everything, we're looking for the 1% or whatever that we do think is built far differently, far better, more sustainably, all that stuff, and it is adding value to the world. So that's hard to find. It's much easier to find short ideas than long ideas because of that. But what does the token do? Where does the value of the token come from? I mean, again, it depends on the project. Again, if it's a governance token, they're going to say the value is voting on, proposals on how to evolve the
Mm.
project and the application and everything. Most people don't care about that, and so for us, I think the most exciting things where tokens have value, like why own it, is if they have some sort of value capture mechanism from the revenues that they're producing, right?
Ah, okay.
So a lot of that is in the form of buyback and burns. So effectively, a project or application produces real revenues, right, with real users and all that. They make money, and then they take some of that money and they go buy the token off the market, off exchanges or whatnot, and they effectively remove the supply
Right.
from the circulating market supply, right? Which effectively makes the token deflationary, right? And all prices are just supply and demand. So if if demand is static and supply is going down, price goes up, right? So it's just like share buybacks for equities, right? Some of them have more yield bearing dividend kind of like stuff, but then you get closer to that securities. You have to be sensitive to regulations and all that for
Mm.
what deemed a security for different countries. But we like to focus on things that are more mathematically value producing, and owning that token gives you some claim either on the cash flows, the future cash flows, or something else within that ecosystem that just will cause that token price to appreciate over time. Maybe it's a utility value. If you don't have the tokens, you can't use it. And we think that the value of the utility of using that application is going to go up over time. Yeah, it really varies across these projects.
Okay, then can you maybe share, you don't have to mention names specifically, but can you share one of your coins that you own that you do see, okay, if the cards are played right, this type of application of a token can really change the industry. Have you seen what would you say as an example that you would say that, okay, I've seen this. I think there's big potential. Which industry is it, and what was the high level principle of the application of it?
Yeah, so everything starts with the fundamentals of the project of how they create value for their users, right? So that's first and foremost. A lot of these things like that has to make sense to us before we even care about the token at all, right? Because if
Mm,
the project or the application is not going anywhere, I don't even care about the token. Like it doesn't make any sense. So first they have to prove that they can create value for society. Again, cheaper, faster, safer than whoever they're trying to compete with. But something like distributed computing or a lot of the decentralized physical infrastructure networks, DPIN is the moniker that people use today.
DPIN,
Um, yeah,
DPIN.
yeah, it just stands for decentralized physical infrastructure networks, if I'm correct. But basically, it's basically like these decentralized hardware networks. Again, think of like computers, validating Bitcoin, right? These nodes
Mm,
and validators and stuff, right? But some of the stuff that we think is most interesting is like for around like distributed GPU power, right? So we call it the Airbnb for GPUs.
mm,
And so effectively, Render is the one that everyone refers to because it's kind of the biggest in the space. There's a lot of other competitors that also compete in the space and everything, but the idea is quite simple. There is limited GPUs out in the world. Everyone has seen NVIDIA stock price go up quite a bit. With AI especially coming on, the need for GPU power to do even more intense AI modeling is immense. It's orders of magnitude than before AI. And so,
mm.
how do you meet this demand? I mean, the chip manufacturers just can't create chips fast enough for the world's demand. And so, generally speaking, to date, when people need a lot of GPU power to do AI modeling or to render graphics for think of like CGI movies, video games, pretty much
Yeah,
anything with a screen requires GPU power. A lot of them would effectively rent that power from like Amazon Web Services or like because
right.
Amazon has huge farms of GPUs, right? And
Yeah,
they
exactly.
sell that. That's the whole cloud stuff, right? And so, but Amazon can't buy all the GPUs out there, and GPUs are very expensive, right? And so I think I saw some stat where it's like maybe 0.5% of the world's GPUs are owned by these kind of, Amazon, Microsoft cloud-based providers who effectively rent this power out to people who use it. The other 99.5% is GPUs in our computers that we're using right now, in our phones, in other places, companies, and all that stuff. And
Yeah,
they're being used for different things. But a lot of that GPU power is idle, right? Like right now, I'm not using my phone. So, my GPU is not doing anything. And imagine just like with Airbnb, with renting out your house when you're not using it, or Uber is kind of using your car when you're, not using it, or you're not using it to drive to somewhere for yourself. Render and these GPU kind of distributed GPU power projects effectively allow people who have idle GPUs to market it into a marketplace where people on the other side who need GPU power can rent it from them through
hmm.
the network. And then they have to effectively effectively pay in render tokens in order to use that. And that creates the token value for that. So the real way it kind of works, and these things always evolve, but effectively a user who wants to rent GPU power from the render network, they're going to go on the application, which just looks like a website, like anything else,
Yeah, yeah,
nothing
yeah.
crypto, nothing blockchain. They go on there, they're like, I want to rent X amount of GPU power. What are the prices in the marketplace that I can get? They put in the specs and everything for their
Mm,
project. And then, they pay in US dollars, right? Credit card, whatever, however it's done, right? There's no blockchain anything, right? They abstract all that stuff away. So, the render network just got in real US dollar revenues, right? And then what they'll do is they'll go buy the render tokens off the market and effectively keep a part of that for themselves for, to make fees. And it's just a decentralized marketplace. So the utility, and if you have render tokens, you can purchase GPU power as well. So that's where the utility can come from. And again, all these different projects do it in very different ways. There's
Right.
not one standard size fits all. We have to ask ourselves, does this make any sense? Do you need a token to exist at all? Does it do stuff like this, or is it something else and we think it's less needed or less valuable? A lot of the tokens are really just to, kind of account for value being transitioned or transacted between two parties and everything, and for governance and all that. There's obviously tokens where if you, just like loyalty rewards is a very popular thing, right? So why can't you
Yeah.
tokenize loyalty points, airline miles, things like that? I mean,
Yeah.
if you think about it, airline miles have value, right? I can actually buy a seat if I build up enough, I don't know, American Airlines reward points or whatnot, right?
Right.
Well, imagine if I could sell those to other people if it was tokenized, and there's a marketplace for that. And obviously they don't want you to do that because they like having control over it. But it's just about, these tokens are really about kind of tracking value of what everyone owns of that value in that project, in that application, in that space, and then being able to make it fungible at the most micro level payments
Hmm.
possible so people can trade value between each other. And, render, I think of render the token as kind of a bet on the purchasing power that this will become more valuable to like effectively one render token will increase in value of how much GPU power that can purchase over time. The example I always use is Uber, to kind of really try to bring down this analogy to what people may understand. If you have Uber, the company, like let's say the Web3 blockchain version of that, right? So there's
Yeah.
no Uber corporate. It's just, drivers,
A
interacting with
peer-to-peer
riders,
version of it. Yeah.
peer-to-peer version of that. So there's no Uber overhead and all the stuff that makes it, there's no one taking 30% out of the transaction or whatever it is from the driver and or the rider, right?
Yeah.
And so that effectively would be cheaper, right? Than Uber could ever be, right? Because there's no corporate overhead, right? So that makes us excited. Okay, well then how would you use this ecosystem? What would an Uber token look like, right? Well, effectively, if the only way I could use this Uber blockchain application, right? Let's call it Uber 2. If the only way we can use this application is I have to go buy Uber tokens and pay the driver in Uber tokens to get a ride from them, well, then, the more demand, the more people that come into the market, it's going to push the Uber token price up.
Mm.
And if there's more demand than supply, obviously that's going to push the value up as well. But if you think about it, if this application works very well and everyone wants to start using it because it's cheaper and faster and maybe even more secure to use than Uber, although I would question it would be safer than Uber, the corporate version of it at this juncture. But effectively, by holding Uber tokens, why would I hold it even if I'm not, having rides? Is because I think that this Uber token is going to go up in value in the number of rides that can do for me. So maybe
Right.
the first time I buy it, one ride equals one Uber token,
Yeah.
right? But as demand goes up, the price of Uber goes up in US dollar value. Next thing you know, I can buy two rides with that one Uber token.
Right.
Demand goes up even more and supply is fixed of the Uber token, right? Next thing you know, I can buy 10 rides. So my purchasing power of rides in this ecosystem has gone up exponentially. And people find value in that for other people who want to buy rides, right? So then one day I can sell that to someone else who values that stuff. And the same thing with render, right? If I value GPU power, if I think that's going to become even more valuable over time, owning render tokens effectively not only gives me a kind of economic value of the fees that it produces every time someone transacts on it, right? So I
Yeah.
get cash flows, or not cash flows, but the buyback and burns, the value from that market. But also, if I own render tokens, I could get potentially more GPU purchasing power down the road if this becomes more valuable over time. That's one model that we look at for why would we hold these tokens? Does it make sense at all? Again, there's a lot of different ways these are done, and these things evolve over time. Render might be doing it one way today that might look totally different tomorrow, and sometimes it's hard to keep up because they're always evolving and trying to make it better.
Mm.
But you can do that because these digital asset tokens are just code. It's just programmed smart contract code. You can evolve them over time if you needed to.
It is, but you see, I'm smiling over here because this is what's great about talking to you, Andrew, is again, you can put something that is so abstract. Well, I mean, on the surface, digital asset to many of us are still an abstract concept, but you really are able to sort of unpeel the onions and get to the heart of it. And just by what you've just said there, it already created a number of business ideas that I could think of that needs decentralization. First and foremost, I would say, and okay, some insure if anybody here is in the insurance industry, I've always thought that the insurance rate being calculated in a general sense is not correct. I've never crashed my car in my life. I've never speeded in my life. And just because some moron down the street sped in my neighborhood and I happen to live in that neighborhood, my rate goes up because of that guy. So we need decentralized evaluation of insurance rate, our insurance rate. So just because you're able to articulate that, actually already give me some ideas on what to do. Maybe I could come up with the next token that could, do something like that, that personalized insurance rating or personalized insurance actuary. But going back to the point is you really can sort of tell me, okay, well, this is how value can be delivered if you can use the token. And that's the important aspect. And that's, I think, a lot of people don't understand about digital asset right now because they don't look into it. All they see is Sam Bankman-Fried is a fraud, Three Arrow Capital is a fraud, everybody is a fraud. Nobody actually goes in and, okay, let's do a deep dive. And to be honest, it's not really their fault because I think you and I, like I said earlier, I just completely tuned out of crypto when everybody had that laser icon.
Yeah,
I just go,
yeah,
no, 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 no. That's just too much. Like the laser eye, the yacht cup club. That's just too much. But
yeah,
I see now things are settling down, and that's again a testament to your ability to stay on because once the noise is settled, whoever left are the serious player. Whoever left are the player that really understands the value, really understands the utility of the technology, and they should be the one that will continue to drive this movement forward, right? All the noise has died down, all the hype, all the idealist is gone. Then it's time to get in. Then it's time to really talk to people. But that leads me to maybe a couple of final questions before we wrapped up. So in the hedge fund world, there are a lot of people you can look up to, right? Warren Buffett, all of these investor people. Who are your mentors in the crypto world then? Back in 2017, who do you see that? Okay, yeah, this guy really. I mean, obviously, Satoshi is not a real guy. I don't think anybody's actually talked to him or her or they. Who do you feel is someone that you can? Okay, if I were to, if you're not listening to Andrew today, you should listen to this guy at the very least.
yeah. I mean, and it really depends on what you're trying to learn. I think there's a lot of good managers in the space, different strategies, different approaches. There's not really one size fits all. It's the same thing in other asset classes. I mean, there's a lot of different ways to research and to make investments and stuff. Um, you know, uh, you know, the VCs have been around for a long time, the OGs, the big ones. Look, they're very knowledgeable of this space, no
Mm,
doubt. They understand the technology extremely well. They understand all the pitfalls and all the things that have gone wrong with plenty of projects over time and stuff, and the stuff that works and the stuff that doesn't. So generally speaking, I think anyone who's a practitioner and who's been doing it for long enough,
Mm,
I think you can learn a lot from them. There's good newsletters and there's good research houses. I'd say Delphi Digital does some great research on newer projects, especially decentralized finance, things like that, where they can really get into the mechanics and help you understand that very well. I think one of the people I'll give a shout out to real quick is you know Kyle Samani from Multicoin. I think he's always taken a much longer term vision approach to this space. And unlike a lot of other VCs, he'll ride that conviction through the vesting of these assets. So rather than just dumping them on the market and all over the liquid players, they seem to be investing for the long term time horizon to hopefully own one of these future Amazons or Googles or Facebooks of the blockchain space, right? And I just I read his stuff and I like the way they think over there. And there's others as well.
yeah.
But it depends. If I'm trying to learn about the technology and stuff, I'm gonna talk to tech people, developers, people who are doing this day and day. I'm gonna talk to the projects themselves, the management or founders and those guys, people who've been doing this for 10 years, all sorts of different codes and different projects and everything. I think we've learned a lot from those types of people. If I'm gonna ask about investment, like who I'm gonna take investment advice or how to run a hedge fund or whatnot, I'm probably going to look more towards the equities world and the world we come from, and take the first principles of what they've done very well and adapt it for this space and our thinking and stuff. And that's exactly what we did, because those guys, investing is it's its own skill. It's very different
Mm,
from, you can understand blockchain all you want, and you could make a lot of money just making bets here and there or trade and all that stuff. But if you're trying to do a more higher probabilistic, investment strategy that's sustainable over the long term and then that's risk managed, that is a skill in and of itself that, you know, uh, Warren Buffett and Tiger Cubs and all these guys have spent decades learning. And then, it took us, decades to learn from
yeah.
them,
Yeah.
over time. So, um, yeah,
Really, it's the time investment. Yeah, the time
yeah,
investment.
it's a time investment. So, yeah, hopefully that's helpful. But there's a lot of great people out there, and it really, look, I mean, someone could be very smart about Bitcoin and know every little thing about Bitcoin, and they won't know anything about another token that you're looking at, right?
Yeah.
So, just make sure that their expertise and their experience is in line with the thing that you're actually looking at or the questions that you're actually asking them.
Yeah, I mean, look, if nothing else, this conversation, at least to me, demonstrate that there are people who actually know a lot about what they're doing. And I'm hoping that people listening to this have their misconception about digital asset demystified, at least some sense, because it's really not just about, you know, when is Elon Musk going to talk about Doge again? It's not about that, right? There are actually methodologies. There is a methodology behind the madness, so called, and if you really look deep enough, if you really if you really know who to talk to, like someone like Andrew yourself, you can actually see, okay, no, there is a way there. There is a way there, and those who have invested the time to feel the ups and downs throughout, throughout all of it would be the best people that you need to work with if you ever want to get in the game and you're too lazy or you're too busy to actually learn about the new asset class. So I'm very grateful that you spend the time with me, Andrew. Thank you very much for your time. And your fund is going to be on the FundKernel platform very soon. So those of you who wants to reach out to Andrew, that's one way of doing it. But is there any other way to reach out to your team? Emails, LinkedIn, or anything like that?
Yeah, you can reach out to us at IR at Black Lotus Cap. com. I guess we could share this in afterwards when you post this. But yeah, I mean, you could reach out to us directly. Through reach out to Simon. I guess is probably the easiest thing. We're very open-minded. We want to be helpful. We want to help educate and stuff. Even if you're not interested in the fund or anything, it's totally fine. Our one of our goals is to help institutionalize the space. We think the opportunities are endless, and we expect plenty of newer, smarter people to be coming in the space over time. Once they really start to get into it, it's hard to look away. The opportunities are just the edge that you can get in this space, given the lack of competition, is amazing. And so. Yeah, reach out to us anytime if you ever want to chat. I think, Simon, thank you for the questions and the opportunity and stuff. I mean, we're just barely scratching the surface.
Oh yeah,
There's
yeah.
there's
But
a
you're
lot
sick,
more
so I don't
behind
want
all
to.
this.
I don't want to. You still need to talk to other people, so you're sick. So I'm not going to take too much of your time. When are you going to be in Asia again?
I don't know. Again, I was just there for 4 months over the summer and stuff, and did a lot of traveling, a lot of conferences and everything. But I have no plans right now. But usually, all it takes is for you know, an
Well,
investor asked me to go over there, and or maybe there's a conference, they want me to speak somewhere, and maybe I'll show up. But we have partners and employees out in Asia as well. So
okay,
and
right.
our and they're very knowledgeable. So yeah,
Yeah.
but I'll let
Well,
you know the next time I'm out there.
yeah. Well, look, I don't care how. I know Puerto Rico is very nice, but I don't care how nice it is. You're not going to get a better BBQ char siu there versus in Hong Kong. So that's
Hong
hopefully
Kong's
you'll
a
come
lovely
back very
place.
soon.
Yeah.
Yeah. Well, look, Andrew, thank you very much for your time. Get well soon. Take some rest, drink some honey tea and or something like that to smooth out your vocal cord. And yeah, that's love to have you again next time. And yeah, thank you very much for your time.
Thank you so much, Simon. Really appreciate it.
All
Take
right.
care.
See ya. Bye.